Hello guys, good morning. Today I will try to speak about a subject that I have never spoken before in my channel. Okay, now maybe you have heard about what we call positive expectancy, and maybe you have read, maybe you have understood, or you have some doubts. What is it? So I will try, as usual, to explain this in a very simple way. Now, in general, let's say um, you traded last year, let's say 100 trades only. Okay, the whole year you buy and you sell, you buy and you sell. So you have done one trade or 100 trades. So let's say, hopefully, you make some money last year, 10% or 5% or 20% or 30% or 100%, wherever is your rate or your performance. Now, this positive expectancy tries to give you a general idea on what you are doing. What is the average of your winners versus your average for losers? This in terms of number of trades and number of profit that you get. So we have two things in this expectancy. So we calculate that, okay? And if you are making money, it gives you a number. Okay. It gives you that in your positive expectancy, because last year you have made money, that you are making in average, let's say, $100 for each trade. This is just the average. It means if you continue doing what you are doing, in the future, you are getting $100 for each trade. This is just the average of last year. It doesn't mean that that it is like a very exact number. It can change. But a lot of people, they use this positive expectancy to see where they are going. And is it good for them to stay trading like this? Or if they don't like it, they should make changes into their way they trade. Okay? So I'll give you another example. Suppose that someone has done the same 100 trades last year and he lost money. With these calculations, he will know what is the average trade loss for the future. Because last year, it could be the same as the second year or third year or fourth year if you don't change. Okay? Since you are using the same thing, the way you search for a stock, the way you select for a stock, the way you do position sizing, it means how many positions in your account, the way you calculate stop loss, the way you do how you follow a trend, all these things, if you continue doing what you are doing, what is the result? You will get the same result as last year and the other year. That's why a lot of people, they lose the first year. It's okay, you know, beginner, you have to learn a lot of stuff. But the second year he loses money also. Third year he loses money also. Sometimes he makes even. It means he is not making no money. Sometimes he or she makes like 5% or 2% or 5%. He is not making that much money for the whole year work. So this expectancy shows you just a general idea on how much you are making or how much you are losing in each year. And I will put some descriptions below just to show you how to calculate. And then if you want to, You can check how many trades you have done last year, and you see losers versus winners, and you take the winners, and you see what is the average, and you take the losers, what is their average, and you do some multiplication and some division, and then you get a number. If it is positive, it means it is above 0. It means you are making some money in each trade. This is for each trade. Now if you make minus, okay, that means that last year you have been losing, and this is your average. Now why is this expectancy in trading very important? Okay, now let's drink some coffee. It is very important to show you your future. It's not exact like 100%. It gives you the general average, because when you trade, don't tell me that all your trades are losers, and don't tell me that all your that the trades you do are winners. Okay, it can happen that you can have 5, 10, 20 winners at the same time. It can. Sometimes in a big market, where all the people are buying, there is enthusiasm, there is a lot of things happening, and all the people are buying, and you see that whenever you buy a stock, it goes up. But sometimes you see losers. When the market is volatile, whenever you buy, you lose. Whenever you buy, you lose. Whenever you buy, you lose for many. This is normal in the market. Don't think that this is it happens only to you. It happens to everybody. Okay? Because when the market is volatile, it's not a trending, and there are not a lot of stocks trending. It's very hard to find the best ones. Okay? Yeah, you use strategy to select and to search for those stocks. You can get some average of winners. So why it is so important to know this, if you are serious to continue in trading? It's just you should know what you are doing last year. Some people, they want to forget what happened last year. Oh yeah, last year I lost $10,000 or 20,000, 100,000, or wherever you lost. Okay, the market, the Wall Street guys take my money. I don't know what to do. Okay, these guys always, when I buy, they sell. When I sell, they buy. Okay, they are all against me, and they hit my stop loss always when I put it. It means here, what you are saying here, when you say there is manipulation in the market, there is Wall Street guys, there is one conspiracy, I don't know where, stock market is all gambling, it's a scam, it's all the stuff you hear it a lot, and you go online. Those people who don't know how to trade say this, say the same thing as the opposite. People who are making money, it's just a way to do business, and they make money, and they say making money, that's why they are called professionals. They make money, okay, because they know how to trade, they know how the market works. That's why they make money. Others, they lose money because they don't know how to trade. And I have seen some people are so stubborn. You just want to show them the right way, and they begin to say, I have read this book, and this guru tells me this and this, and I follow this guru in TV, and he is one of the best traders on the world, and he told me buy this, sell this, buy this, sell this. And I saw someone who is very famous and with very credentials, from $1,000 he has $18 million. This is just this is funny, where someone sent me an email, and he told me, you should show us credentials. You should show us that you are famous, that you go into the TV, that you make like the other guy. I say, who is this guy? I say, this guy, from $10,000 in 1 year, he got 18 million. Okay. And when I read in his when I read in his profile, he is a stock analyst. I tell you, man, this guy is a stock analyst. He gives opinion on stocks and he doesn't trade. Even if he trades, okay? From 10,000 to 18 million in 1 year is too much. Okay? What does he do? No one knows. And these people, some people, they just add to their account money and money and money, and begins with 10,000. It can end up with $1 million without trading. They just add from other places, or they have other businesses and they add to their account. And when you see the account, yes, it goes from 10,000, goes to 1 million or 2 million. It happens, and it will happen. But they don't trade because they do stock analysts. They analyze the market and they give views. And who pays them? Some stock analysts, they are paid too much money, millions of dollars each year. So this 18 million he can get from his job. He knows when he goes to the market, it is tough. If he doesn't know how to trade and he make preserve his money, he will lose money like everybody else. Okay, this is not. This is like a jackpot in gambling. If you have 10,000 and you get 18 million in 1 year, I say to him, did he stop trading? Why he stopped trading? From 18 million, he can have 50 billion in another year, 50 billion in the other year. He can have like 1,000 or trillion dollars. Okay, tell me this. If he continues like this, why he stops? Why someone stops from 18 million to get 1 billion in the next year? Since he has begun from 10,000, he make 18 million. Those people, I see, they are overwhelmed by the media. The media, they give them information, and in their head, they don't process this information. Because the media, they know that there are a lot of stupid people in stupid people reading, and they believe whatever they say. You know, you yourself, you can make a channel and you make a blog and you tell your news, and people, they believe you. Okay? Anyone can do that. Anyone can do that. Okay, we go back to our subject. Expectancy, it means just it shows you if you continue the way you do business. It means if you continue the same way you do trading, what will happen? You will get the same results. Let's say if you are good and you make money. Let's say last year the average, you make all the trades, because this is all the trades, losers with winners, all we do a combination, and all the trades since you have money, since you have make money last year. So the average, for example, is $100. Okay, $100. It means last year you have made, if you have made 100 trades, you have made $10,000 last year. Okay, if you made 100 trades last year. So this is what we call positive expectancy. If you continue what you are doing, next year you will have 10,000. The other year you will have 10,000. And when your account becomes bigger, you can have 11,000, 12,000, 15,000, depending on the depending on how much you trade, how many trades you trade, depending on your money. Since your money grows and you don't take from your account, it becomes bigger and bigger and bigger and bigger each year. Okay? Now, if you are losing, let's say you lost $50 in each trade, all the trades last year, with these calculations. It means, in general, that next year, or this year, if you are doing the same things as last year, you will be getting the same thing, or worse. Now, you tell me, how is this useful? Now, this useful It is useful because it just gives you a general idea on how is your trading. Is it positive? It means you are making money. Or is it negative? And how much you make in each trade. And this is very important. Okay? Because if you make more trades, you will get the same money. So maybe you do more trades and you have more money. And you can check how to calculate stop loss, how to do position sizing, and how to manage your account. And you can minimize some expenses, fees and expenses and commission, and your money becomes bigger and bigger and bigger. And these calculations helps you understand your trading, because it's very important to know what you are doing. Okay? If you lose 1 year, you don't change nothing from your trading. So what will happen to you? It will happen that you get the same results. Why should you think that you can make money this year since you are doing the same thing as last year? Why? Something is common sense. If you are doing wrong last year, you continue to do wrong unless you change your strategy, you change your way of doing business, and you look into your account what's wrong. Okay? Most of the time it's you, it's not the market. And stop blaming always the market and the Wall Street guys, hedge funds, mutual funds, I don't know. Oh, I bought a stock, but there is a sell off. Oh, I lost all my money in that stock. Okay, you can't stop someone from selling. You sell the stocks, you have profit, for example, and you sell stocks. Does someone else say why you sell a stock? No one asks you any questions, so don't ask questions for other people. Don't say to mutual fund or hedge fund, why you short this stock? I just bought it. Man, you are heartless. You are merciless. Okay? The stock is just going up. I just begin to make some money, and this coward hedge fund, he comes to my stock and he shorts it. I read it in the news after that someone who is very big hedge fund short this stock and he got too much money from this stock. And I lose money because of him. No. Sorry to tell you, no. It's not because of this guy that you lose. You lose because you don't know how to trade. That's why I always try to make it clear that the problem is not the market. The problem is you. When you change you or yourself, you change your techniques, change your strategy, change the way you do business, there will be a change this year or next year into your trading. Maybe if you are losing money, next year you are making money when you do some stuff. You change things. You see where you are wrong. Okay? And that's why I told you always, there are skills that you should develop by time. It's not by one night or 1 month or two you become professional trader because of something or something. No. You need time to learn the business. And you should learn a lot. And it's always, there are news, there are things that you should learn. Okay? You should learn new things. You shouldn't stop knowing you have 5 information or 6 information in your head. That's it. And you always use, and you always lose money. You always lose money. You are always losing money. So why you stay with this things that you are doing? It means it doesn't help you. So you should change. This is common sense. Common sense, everybody. This is logic. This is what I always say, it's math. Okay? If you do something and you're always losing last year, you will lose this year and you will lose next year. Why do you think you will make money? Because you are using the same losing tools or losing techniques, or the way some people, they still believe in indicators. Oh, I use indicators here and there, and when you see his chart, it's full of lines, full of clouds, colors. You don't see even the price, where the stock is or where it was. I have seen teachers online or guru online or wherever they do, when they show the chart, and when they show how do they trade, or they show the market, they try to teach you the past, trading from the past. Okay, oh, here is the support, okay, buy from here, and after 2 weeks, oh, you get 50%. Okay, how do you think the support, when you buy from the support, it will go up? What do you think if it goes down and there is a downtrend? Okay, so a lot of people, they try to put as much information in the chart, and they think that this kind of information will help them because they follow other people and they explain to them that this indicator is the most important indicator in the world. If you don't use it, you don't make money. Which is, all these indicators that you use are useless, because when you go to your broker, you will find all the indicators aligned. There are more than 300 indicators. If you are using 1 or 2 or 3, another trader is using the others. The other trader is. So all these trades, all these things that you use like indicators, it doesn't help you make money, because they are mixed criteria that you don't know even how this indicator works, because most of the indicators are just a sum of the day closing. That's it. It's not a day closing. It shows me if the stock has begun a trend or no. So it's the way you do business that it is wrong if you are not making money. But if you are making money, try to see again to ameliorate your performance by looking at what you are doing. I know this is very hard for beginners to look at their account and to see, and because they see, oh, I don't want to see that account because I have made a lot of bad trades and I lost a lot of money, so I don't want to see it. Now this, it's very hard. If you are doing business, you should look at your tools, should look at your expenses. It's just someone I thought, he told me he is paying $10 like a commission. Okay, $10. If you pay $10 to buy, $10 to sell, what does it mean? It means you lose $20 for each trade just because of this broker charge you $10. Now the question is, if you make 100 trades last year, how much you lose from how much the broker takes from you? He will take $2,000 last year. Now if I ask you, why don't change the broker? Why you stay with this one that charges you $10? There are someone who charges $1 or $2 or $3. Why you stay with $10 a commission? Those that they use $10 or $15 commission, they are a very, very big brokers. They are for old people, those who are wealthy and they have money. Okay, that's why they use those. For example, if someone wants to buy, let's say, 10,000 shares of Facebook. Okay, 10,000 shares, not 100 shares. 10,000, 20,000, 30,000. Now, if he pays $10, it's no problem for him. It's just $10. But for you, you have 5,000, or you have 10,000, or 15,000. How can you pay $20 when you buy stock? You buy and you sell stock. It's too much. You are not an investor. If it is an investor, you buy a stock for 10 years, 20 years, it's okay. It's okay, because each year you stay, commission becomes less and less and less and less. since you buy only once. But the problem is that you are doing swing trading. Now in swing trading, you should do some trades, not like more than an investor. Investor, he chooses 2 or 3 or 4 stocks or 5, and he buys them by time, and that's it. But for you, you are not an investor. You should buy and sell in order to follow trends. And investor is not following trends. He's following the company that grows. And each year it grows, and he makes money because the stock goes up. Okay? So, the expectancy that I am talking about, either positive or negative. If you are negative expectancy, try to see your things, your techniques, your tools, and try to change your mindset, change things, and believe me, when you change things, things will go for the better, because at least you are trying to do something. Now, for those who don't want to do anything, they will continue to lose until they wipe out their account, and they stop trading, and they close their account, and they go online and they begin to complain and to blame the market. How can you blame the market? The market is always going up and down. Why you blame it? You can't blame other traders for buying or selling. It's their business. For you, for example, when you buy a stock or you sell a stock, does someone send you an email and say, "Oh, why you sell a stock and I just bought it?" Okay? Why? You are ruining my business. I'm just buying a stock. You should buy with me and the other buy with me, and then we have money. All together we have money. Okay? This is ridiculous. Okay? That's why don't think that someone will send you an email. Email, or the market texts you. Okay? The exchange texts you because he knows you, and he say, "Why you sell the stock?" Okay? There are some people who just bought the stock. That's why we have always buying and selling, buying and selling, buying and selling. If there are more buyers, the stock will go up. If there are less buyers and more sellers, the stock will go down. This is the nature of the market. You can't change it. If all the people, there is a hysteria, or there is a what we call a bubble in the market, all the people, they come and rush and they buy. So almost all the people make money. And one time, when all people are selling, all the people lose money. Investors lose money, swing traders lose money, day trading lose money, because the market is volatile, like these weeks that we see. Okay? A lot of people, they lose money, but it depends. Professional traders, they always lose little money compared to beginners with the same amount. Okay? Let's say a beginner has $10,000 and he buy a trade, and professional, he buys a trade with $10,000. You will see that even if both of them lose, you will see that the beginner lost more money than professional, because the beginner doesn't know how to calculate the stop loss. He doesn't know when to exit when it's against him. He should wait and wait and wait until he lost 10%, 20%, 30% of his money, and then he feel the pain. Maybe he didn't put the stop loss like many beginners, and then he exit crying and whining, and he just shut his account, and he doesn't want to go to his account until his feelings change. That's why sometimes you are sad, sometimes you are happy, sometimes you are angry. You put your feelings into the business, and believe me, you will never succeed like that. In order to succeed, let me drink some coffee. In order to succeed, you should calculate everything. Calculate your expenses, like commission and like fees. Calculate your stop loss. Manage your risk in your account. Position sizing, you should know how many shares you buy in each position, how much money you allocate in each in your account. All these things you should learn. You can't find in the online for free like this, and you just go and you learn it by someone will teach you everything, and then you become to make money. You can, there is no free lunch at the market. Understand that. In order to become professional, you should pay for your education. This is the only way. Or you should hit and miss many years until you succeed by yourself. Okay? You succeed by yourself. But it takes you time, many years, if you are serious. If you don't do crazy things or kamikaze trading, as I explained before. Okay? So thank you very much for watching this video. Hope it's not long. As when I'm speaking, I always carried out to speak about something else than the subject, because everything is related. Everything has a relation with each other. That's why trading is only one thing. It's not many things, and it's so simple when you want to learn the thing. Okay, thank you very much. If you have any question or comment it please. Thumb it up or subscribe if you don't. Thank you very much.